Gentlemen, as I mentioned at the top of the show, we have a great lineup, and I hope everyone is listening closely because our next presenter has crucial information to share with us today. He started helping traders and firms find growth and consistency in 2010. His trading journey began in 2006, trading firm money while attending the University for Finance and Math. After that, he became completely hooked on trading the market, working for hedge funds, prop firms, technology companies, and individual traders. As a chartered market technician, he uses his technical knowledge in combination with years of quantitative and algorithmic trading to combine the best of these two worlds to create a unique trading style. Here to present You're Using RSI Wrong is Mr. Michael Nauss of Trade Ideas. Welcome back to Trader's Corner, Mr. Nauss.
Hey, how's it going?
There you go. I was going to say check your mute button.
Oh, I'm a trained professional at this point. Is all
Welcome,
this
brother.
working? Is the camera coming through correctly and all of that?
I can see your screen. I've got link up on the daily and weekly, and looks like some orders on the right, and I got your webcam up top. I don't know if you want to leave it on or turn it off at a point.
No, that's cool. Yeah, and actually, the reason I'm starting with the screen, we'll go to my presentation in a second, but this is Trade the Pool, just as Michael was talking about. So I am using this myself, and as he mentioned, there is a partnership with Trade Ideas and Trade the Pool. So if you like what I have to say, I also will encourage you to check out Trade the Pool, and if you buy a couple of their plans, you get a little bit of Trade Ideas in with that. So it's always good to see collaboration in the space, and I've spoken to Michael many times, and I can vouch for him being a good guy. So yeah, I just wanted to say, hey, these things aren't happening in a vacuum. We're all friends out there, and it's a really good thing. I watched his presentation, and I totally agree with the risk management side of things. Like as my intro said, I started trading at the prop firm many years ago, and I actually point to the prop firm is where I've learned by far the most about trading, and simple things like they stop you from doing craziness, right? So as much as you may curse the risk management that's going to be forced upon you at a prop firm from time to time, in the long run it will save your bacon, it will teach you good practices, and we can go from there. And the cool thing is all the positions that you're seeing right here, these are all my day trades currently for the day, are going to be entered with this RSI concept that we're going to talk about. So all comes full circle. I just thought it was cool. I actually didn't realize Michael was before me until I tuned in. So probably wasn't done on purpose, but worked out really well. Now, how do I change what I'm presenting? You know what? I don't even have to.
On the bottom right in the control box, you get to pick which screen you're sharing.
Bottom right. I'll just do it this way. I'll just look at the presentation over here. That'll be good. Yeah, so as always, what I like to do with my presentations is I want to give you guys a little bit of content, give you some education, maybe a different way to think about the markets first, and then we'll go in and we'll start talking about trade ideas and everything that we can do and how it relates to the topic I'm talking about second. So I've attended enough of these webinars, and I hang out a lot of these webinars, so I enjoy them, but I just always want to make sure that there's some education going on. So if when I get to the point where I talk about how awesome Trade Ideas is, if you kind of gloss over, at least you've had some sort of takeaway we have here. So yeah, the title, you are using RSI wrong, is funny. When we were sending out these invites and in with collaboration that we're doing here, there was a couple people who were almost offended by the title. It's not my RSI, but I do believe that the majority of people are using RSI wrong, and that's kind of what we're going to talk about. And when I say RSI, just you can replace MACD, Williams R, whatever overbought, oversold, TTM squeeze, whatever oscillator you use. I hope that this presentation gives you at least some idea of maybe how you could rethink this a little bit, and maybe some new ways to get a little bit more out of the market. So first of all, right, we got to do this. You'll see this a lot every time, I'm sure. Everyone before me and everyone after. We got to keep the compliance people happy. We got to keep the lawyers happy. What Trade Ideas is a software provider. So we sell the picks and the shovels. You say, I want to scan for stocks that are gapping today and that are doing a lot of volume, and they're gapping over, into new multi-year highs or something. We can find that for you. Or, hey, I want to just know when 1 minute volume spikes kick in. So all day I just want to sit there and I want you to say, hey, there's a big volume spike on this stock or a big volume spike on this stock. We do all that. We do that in real time. What we're not is investment advisors, right? So everything you hear me say today is educational purposes. And again, I'm sure you've seen a lot of that. So I think that was leaving that up long enough that I'll keep everyone happy. So who am I? It always makes sense to introduce myself. So my name's Michael Nauss. I'm a chartered market technician. I have a chartered alternative investment analyst, and I have a certificate in derivatives market strategies. So a whole bunch of letters after my name. It basically just means I've been in this game to kind of earn the gray, long enough to earn the gray in my beard. I've spent 10 years working in different hedge fund space. We did risk management, talked to different hedge funds, some that were structured, like we were talking about with Trade the Pool, with a variety of different traders. This was all around the Bernie Madoff time. If you guys have seen that Netflix documentary, that's a good one to check out, and you'll know why my position existed soon after that. And now I'm consult with Trade Ideas. I help build a lot of their quantitative tools, start to try to figure out the math with the, I try to combine my CMT, which is technical analyst, and then I try to combine that with mathematics just to make sure that everything I'm doing makes sense mathematically. And then I use my eye as a technician to kind of hammer that point home. So that's kind of a little bit about me. And then at Michael Nauss CMT is my Twitter if you want to follow me on Twitter. 99% trading related, and then a picture of some dogs every now and then. So we are going to talk about, that got cut off when I shrunk this, but that's fine. So we're going to talk about the relative strength index today. And it's interesting because when I took my CMT, this is by far the most used technical indicator from the entire market. And you'll see it all the time. If you're on social media, you're following other traders, quite often if they've got a little squiggly line under their chart, that's the RSI. Most people, I believe, are using it wrong, and I think it's kind of been shown, and I will show a bit mathematically why that doesn't make a lot of sense to use it the way it is. So this is the indicator. There's nothing special just looking at it, but what we're taught is that when an indicator or any sort of overbought, oversold indicator, when it gets into the overbought area, that's the time to sell. And when it gets into the oversold area, that's the time to buy. And it seems so simplistic that it doesn't shock me that actually a lot of people end up kind of falling and gravitating towards this. We wish trading was that simplistic, but I'm going to first dismantle this idea, and then I'm going to show you some cool ways to do it, and then we'll hop into Trade Ideas, and I'll show you some scanning tools that we have to help you with what I'm going to teach you in this lesson. So first of all, don't worry about it. I've got 2 slides with math equations on them, but we won't be tested at the end. I know there's not many math nerds like me who really care about this kind of stuff, but how is the RSI calculated? And there's so many people out there using all types of indicators, whether you got an RSI, MACD, anchored VWAPs, volume shelves, all kinds of craziness that you'll see. And they don't even know what the root of it is. They don't know the mathematics behind it. They don't even know what the indicator is trying to tell them, right? So this is the first step. And you can see, just ignore all this plus 100, negative 100 divided by 1. Let's just ignore all that kind of crazy algebra stuff. And let's just look at this part right here, where it's just the average gain over the average loss. That's at its core what we're trying to tell you here when we look at the RSI. If it's moving up, it means the average gain over time is increasing over the average loss over time. If it's moving down, it's the other way around. We're having larger average losses than we are average gains. And then this is just kind of the smoothing part of it. So it just creates the line, right? So if I go into a chart and I say, okay, well, now that we know that all this indicator is doing, and I'm really trying to boil it down to the brass tacks to kind of demystify it, but if all that's happening is it saying, hey, here's the average gain versus the average loss, now does it make any sense to go back to how we're always taught about RSI and all of these indicators, which is to say, when it gets over 70, that's when we have to sell our securities. And when it gets under 20, that's how we have to buy our securities. Or maybe we're going to flip that on our head now. Maybe we're going to look at it. We're going to say, okay, the average gain, if that's increasing, wouldn't that be a good thing? And if that's decreasing, maybe wouldn't that be a bad thing? So maybe we should look at this a little bit differently. So, right, first of all is Zoom. Could you imagine if you were holding Zoom and the pandemic hits, Zoom's still holding up, and then we hit right here? That's when it gets oversold. It reaches over 70. That's the first time kind of in this area right here. And we say, okay, well, that's it. My indicator told me to get out of Zoom. I hit the mystical oversold area. It's time to go. And then you miss the move from 100 to 450 on this name, simply because, again, it says overbought, it says oversold. That's what I read in my book. Away we go. And then let's look at the other side of Zoom. And that's when it got oversold right here. So you're like, okay, it's time to buy Zoom. It's hit the oversold mark for the first time in, pretty much 2 years, right? This is an amazing thing. Again, I was told to buy when indicators become oversold. So let me just buy right here, and then it immediately falls out of bed, right? Now, I'm giving some empirical examples because it's better than numbers, but you can just, in a little trust me bro moment where the buying oversold in any kind of indicator and selling overbought in any kind of indicator has been studied ad nauseum by large institutions, hedge fund managers. Believe me, if there was some sort of hack with this, it would have been found and someone else would have been using it. But now I've done the statistics on myself on the S&P 500 going back as long as the spider sector existed, or the ETF, which was, I believe, 2004. And over time, what happens is if you buy things that are oversold and you sell things that are overbought, you are capping your gain and you are experiencing all the drawdown. So if we take a look at just the SPY, let's just go to this. If we were to take a look right away and just look at the SPY and go back as far as our charts will let us here, what you're doing when you're playing with these indicators is you're basically saying, well, I want to always be out when the security is doing well, and I want to make sure that I'm always in when the security is doing poorly. So even for long periods of drawdown where the market's doing nothing, you're buying at relatively bad prices and then just holding for incredibly long periods of time. So you're getting all of the drawdown of the security and you're capping the upside of the security. So the whole let your winners run and keep your losers short, with the traditional way that we're taught to use these indicators, it's actually telling us the complete opposite. So it's no wonder why most investors and most traders end up failing, if by just the nature of the tools that we're taught to use are telling us to do the opposite things of what it is that we would like to use, right? Every time this thing gets into this overbought area up here at 70, you're exiting your position right here and you're waiting for it to get oversold, which doesn't happen until about this area, right? And then you're hanging out through all this time and then you're selling again right here. So you sat through all of this drawdown just to get a little bit of money, and then in through here, same kind of thing. You get a little bit of money and then you miss the entire up move. And so just looking at these charts, just sitting back and going, okay, now what's this really telling me, right? So we get oversold right in this area. So I have to sit through all of this drawdown just to then sell when it's right here, right? So if conventional wisdom's wrong, then what do, right? So math, right? Let's go back to what that math was telling us when it came to this indicator. And again, I can extrapolate this out to any indicator. If you're talking about Williams R, it's the same kind of thing. Bollinger Bands, it's the same kind of thing. People buying when it's under the lower Bollinger Band is just saying this thing's moved, had a price shock in a negative direction. Now it's time to buy it. And I'm going to sell when it has a price shock in a positive direction. But if we just look at it and we say, okay, well, wait a second. If the average up moves and I'm comparing that to the average down moves, shouldn't I then just say, hey, if it can't actually get to that oversold position, if it can't get oversold because the average down moves aren't very much and they're being overpowered by the average up moves, maybe that's a strong stock, right? Maybe I flip this entirely on my head and say, okay, let me just completely rethink about this indicator. So let's look at the same chart here on Zoom. So again, before, using these indicators the way they're taught had us buy Zoom right here. But you can see to the date that I took this, which was only a few days ago, all the way from kind of the top of Zoom, we never reached that oversold area. So going back to the math, now what's the indicator telling us? The average up move on this isn't very much versus the average down move. So in this case, now I can take this indicator that really wasn't telling us what we wanted to do as an entry and exit point, and now something that's not even designed as a trend indicator is turning out to be an awesome trend indicator. In this scenario, you can say, hey, I'm just going to stay at a Zoom because every time it tries to get to around the 70 area, it just can't do it. It can't get to that oversold area. Therefore, it's not something that I actually want to participate in. And maybe I should look at this from the short side. And you can see that, pretty much on Zoom at any period of time after 2020, if you had looked at it on the short side, you would have been having a good time. If you looked at it on the long side, you've been having a little bit less fun. And then here's another one. Here's one that I'm actually looking to get involved in if this thing can get going. It's actually, I may have taken the screenshot 2 weeks ago and it's boring me. But you can see with something like Stitch Fix, where this thing used to be, I believe, like $150 stock in 2020 and just completely fell out. So if you had just ignored it the entire time, but now you've noticed that during this period of time, this RSI is unable to get oversold, right? It's unable to breach this $30 or 30% or 30 area, which we're told is the oversold area and time to buy. It hasn't been able to do it for over a year. So again, going back to the math of the indicator, and that's really the takeaway I want to give you guys here. If you're using an indicator and you don't understand what the math is telling you, take a minute, right? Go into Investopedia is a great example for this. There's lots of resources out there. And just say, okay, what is the math telling me? So on this particular stock, what is the math telling us? Well, the average up move for a year hasn't been able to really get going enough to change price, but it's been able to outpace the average down move to a respect that the RSI hasn't been able to get oversold. So now I can say, okay, well, instead of me trying to just pick the bottom and buy it every time it got oversold, which it did here at, I believe it was 65, and then it did it again at 35, and now it's at 5, right? So all of those positions would have been a bad time. Let me just see, and let me just find stocks in which the RSI has never been able to get into this oversold zone. Also, if you take a look at ELF, right, it had a few dips back here, and this one's actually still on a run since I did the screenshot. But you can see, again, for an entire year period, not able to get oversold at all. And if you had bought ELF anywhere in this period of time, even if it took you the first 6 months to notice it hasn't been getting oversold in a while, that's kind of probably in this area right here. And you had a massive run and then a little pullback and then a massive run. But even on this pullback, you can see it was just met with buyers so quickly that again, and that RSI wasn't be able to get oversold. So when I discovered this, and this is something, there's a man, Andrew Caldwell, who kind of talked about this a lot. My good friend at All Star Charts, JC Pretz, mentions this as well all the time. It kind of was an eye-opening moment for me as a trader and investor, just saying, oh, I had always just completely dismissed indicators because of the fact that I had studied RSI, and I said, hey, you know, if you use it the way the textbook says, you lose a lot of money. But that doesn't mean it's useless. Maybe you can take something that you're already doing or something that you've done in the past that maybe didn't work for you, flip the concept on its head and say, okay, what is actually going on here? And what is this actually telling me? So something that's not meant to be a trend indicator could turn into a pretty good trend indicator. Now, also from the short side, this ARLP, you can see the RSI up here not able to get over 70 for a long period of time. And this could be on this name, just telling us that we may have this, you know, call it a rounded top, or, you know, you could see maybe shoulder, head, shoulder, whatever you want to call it. But the indicator is telling us that, hey, on these up moves, there is sellers just coming in every time. That we're not able to reach this overbought area where the average up move is really beating the pants off the average down move. So maybe if I was in this stock and I noticed that, hey, we got this choppy price action and we're not able to get, you know, going here on the indicator, maybe it's time to go. And if you had taken profits kind of anywhere in this area, you'd be happy, not because it's down a whole bunch, but just because, you know, imagine the boring action and what you could be assigning your capital to in something like this. Now, another way to look at this, and again, I'm going to show you scans for both of these, is with divergences, right? So I leave this to the end because it's a little bit more complicated to explain. But simply put, the force, you know, think of RSI as measuring, again, I keep saying average up move and average down move, but you could also replace that with what is the force of the up move versus the force of the down move. So the force that created this down move is now greater than the force that created this down move. So although price made a lower low, the RSI indicator was not able to make a lower low. So as we pushed down here really hard, there was a lot of sellers. But then as we pushed down and we made this second low, there was a lot less sellers. And when I talked about right in the beginning, and I showed you my the pool trades for today, they were done with the reverse of this. A lot of those stocks were making new highs, but the RSI was not able to make new highs, showing me that, hey, maybe these things are going to come in a bit. Let me take little short day trade positions and see what happens. And again, on this chart, you can see, you know, you don't just buy it because this is occurring, but if you stack that on top of different analyses, you can say, hey, we may be close to a bottom here, because what generally may happen is that all of the force of the sellers were used up to make this low, so that when they came to make a second low, the momentum indicator is saying, hey, they might be running out of steam, might be time to take the other direction. So, right, a couple of these charts, this BHVN, same, you can see the same thing happening here in practice, where the RSI is making higher lows and the stock's making lower lows. So maybe combine this with the fact of just basic technical analysis. Say, okay, we're at a support zone right here. The RSI is getting, you know, it's not able to make a new low with price. So if this thing's going to push higher, then I know I can lean off this level, and I can lean off the fact that there's some exhaustion to the sellers. This is an equity chart of an analysis that I put forward, and for basically a system that we have that uses this indicator combined with a bunch of others to find relatively strong names in the overall market. And again, I just wanted to show, by flipping this indicator on its head and not buying the stuff that's, you know, tanking and creating these oversold conditions, but by buying the stuff that's failing to make these oversold conditions and combining that with other points of technical analysis, this back test that I was able to do on this system, and this is a system that you can find with Trade Ideas with the link that I'll show you at the end here, is able to outperform the market. So just by simply saying, hey, I'm going to take what everyone else is doing, and I'm going to reverse that. This is what's going on. And just for 2022, you can see the market when I took this was down like 25% at that point. And again, by taking the stuff and saying, I'm not going to buy the dip, I'm going to buy the stuff that refuses to dip, how you're able to squeak out a positive gain there. So tradeIdeas.com/Nauss, my last name, should take you to a page which you can sign up and get access to 1 month of that algorithm for free. If you're interested in more of the software, which is what I'll get into with my final 15 minutes here, again, we'll go through, and that's going to be at that website as well. You'll be able to find out more information about that. And thank you, Rob. I see that. And as I'm going through this is a great time if anyone has any questions on this. But let's take this. So this is Trade Ideas. And again, we are a scanning and alerting, back testing. You can auto trade systems once you develop them through interactive brokers and E-Trade, and very soon also with Alpaca. And we can scan for a lot, right? So again, I want to spend most of my time teaching, and I want to show you guys a little bit about what the software can do. But just so I always do this demonstration, it's so wild. I'm just going to scroll down. These are all of the different filter types and things that you can customize. You don't need to understand programming, thankfully, because I don't. This is all either built for you, which is some of the scans that I'll show you in a second, or this kind of nice GUI interface. And again, I'm just at the halfway point, but everything here you can add to scans. We focus a lot on the intraday to swing time frame, but a lot of the stuff, like I just mentioned, is applicable for these longer time frames as well. And yeah, it's just barely reaching the bottom here. So again, I just want to preface that I'm going to show you the stuff that had to do a lot with what I talked about, but there's just so much more that we can do. Let me load these up. That is kind of on top of everything else that I'm showing you here. So let's do the RSI divergence long. So yeah, so this scan is one, and you can see that with this scan, every time I click on it, my chart updates. I have a nice, what we call a single stock window up here, which just has, again, all of those filters that I showed you can be added to this, but I have this kind of customized in a way that I like. I'm interested in who's holding the securities. Is it institutions? Is it insiders? Is it neither? I just want to know, cash to debt ratio. I'm a technician, so I don't spend too much time on this, but hey, if they have more cash than debt, that's probably a good thing. Is their earnings growing or shrinking, right? Do we want, I want to buy a stock that has growing earnings. So this one has growing quarterly growth, and it has growing quarterly earnings, which is great. You can look at EPS. There's also short float. Yeah, up here, short float as well. But again, you can customize this to your liking if you want to fix all of these kind of things right here. But this scan, you can see it just updated a minute ago. So these scans will update every 30 seconds, give or take. And they'll be able just to go through, and they're doing exactly this. They're showing, if I scroll back out in this RSI, for 6 months, it's not able to get under the 30 level, which is just right here where I'm showing. Let me load up my Epic pen so I can mark up a little bit. But yeah, so here's the 30 level. And this is where technically we're told, hey, if it reaches that level, that's a good buy. Now, if the stock's in an uptrend, maybe that's the case. Move that right there. So this is the 30 right here. Maybe that's the case, right? In this scenario, right, you would have bought probably somewhere around here. Again, you would have had to suffer a whole bunch of drawdown. And then when it broke 70 right here, you would have sold. So that would have been your profit. But by simply, again, like I talked about, just flipping it on its head and saying, this RSI or this indicator, the RSI, that is available everywhere. Again, we hope you come over and use Trade Ideas, but even if you don't, you can find this indicator all over the place. If this is unable to get oversold, then, well, maybe I should look for breakouts, right? So I actually own a little bit of Rambus because I saw this in this scan yesterday. I have it sorted by, which you can sort it by a lot of things, but I have it sorted by stocks that are in the high end of its range. So I took a little bit yesterday as it broke out. It's some great continuation today. The semiconductors have just, as an industry, have just been on fire. I think it probably has a lot to do with a lot of the AI stuff going on. But what I love about this scan is just all day long, I can just sit through, or at the end of the day, and I can scan through things that are, at least for the last 6 months, unable to reach this oversold territory. So what I find a lot of is stocks that are either in awesome uptrends, because my job as a trader is to find something in an uptrend, hop onto that trend and ride it for as long as I can. When the trend reverses, get out. Also, you can find a lot of stuff, like I mentioned, SFIX, which I'm watching here. This one's been an entire year of the RSI not being able to get oversold, right? So eventually, if this thing ever wants to break out of this range with a 19% short float, nearly 20%, so 1 in 5 shares that exist on this name are short, you might be in a recipe for a nice little push. Now, do I think a condition like this would get us back to $100, which this was before? Absolutely not. But hey, if I can get a little bit of 5, and that can go to 8, if it can go to 10, that's all I want. So those are the two scans that you'll find with this one right here. Again, either long bottoms, or I prefer things that are pushing up. You'll also notice that when you go through this, there can be a lot of themes that you pick up. So we have Rambus, which is a semiconductor. We also have STM, which is a semiconductor. And when you start to go through these scans and you start to say, hey, there's a whole sector that's acting like this, well, maybe that's then a sector I want to look at. So maybe I don't want to buy Rambus, and maybe I don't want to buy STM, but maybe I notice there's a lot of things in there where, hey, these computer manufacturing companies and semiconductors are doing great. So maybe I just want to go to like some names that I know, and I just want to look at like NVIDIA and say, okay, well, if the whole semiconductor industry is doing well, then I could probably buy NVIDIA and make some money off that. So that's one way to use it. And again, it's one of my favorite ways. You can just all day long, basically, it just gives you a list of stocks to go through that are just looking fantastic. And it really takes a lot of time and energy away from me, where I no longer need to look at individual. I don't need to hunt as much, right? So this booking BKG. Now this is a little bit too expensive for me to trade at $2,500 a share. But I can just take the fact that I know that, hey, if it's in this scan, that RSI is over 30 for at least 6 months, and we have a nice little ascending triangle right here, I know my trade plan, right? I've studied enough of these triangles to know that if the stock is strong, they have more of a chance of breaking out than they do failing. And, if this occurs, then I know, hey, if it's on this list, I know it's strong. So I know if it breaks out, then I have a very simple trade. Doesn't mean it's always going to work magic here, but you can see a lot of really cool names. This FTAI, same thing, breaking out of a range. This was on this list yesterday as well, for the same reason. Now, the other example that I gave as a way to trade this for people who don't want to be like me and are still in the buy low, sell high, they're still in kind of the bottom picking mind frame, we have that other way around with this RSI divergence. So again, if we look at the math and we focus on what the math is telling us about this indicator, it's basically saying that this low right here, it took less overall energy or force. The sellers had to fight less to make this low than they did this low right here. And that's just told to us by the RSI making a higher low. Well, maybe for plug power, we're reaching some sort of a short-term bottom. Again, I would never trust an indicator to make a decision on its own, but maybe I look at plug, maybe I zoom out a bit, I look for, I can't really see anything here, but I guess you could say there's maybe some support back here at 11. Maybe you want to take a shot So there are ways to use this, and that's what I think the main appeal for these type of people who want to buy kind of beaten up stocks. There is a way to use RSI for that. I just think that it's not necessarily the way that you're taught, in which there's another, the examples are everywhere. And we've all suffered this as well, right? If I started to buy RSI when RSI reached under 20, right in through here, that was $20 a share, and this mattress company is now at 2. So again, we have access to tons of different scans. We have day trading stuff. We have artificial intelligence. We have back testing. We have the whole gambit. I just wanted to maybe shake up a little bit of the way that you may be thinking about using indicators in your trading. See if there's a way that I can say, hey, maybe don't look at it like that. Maybe don't abandon it entirely. Maybe come over to Trade Ideas and look at it the way we're looking at it and see if you can find some advantage. So I've got my 5-minute reminder, so I want to make sure that if there were any questions that I'm able to answer them. Oh, there we go. So I have the questions panel open. Is it sorted highest to lowest or lowest to highest? I don't know here. But if there are any questions, certainly let me know. Oh, hello? I heard something.
That was me. I was going to tell you they're sorted chronologically, and if you pay attention to the time, only the ones asked while you were presenting are for you.
Okay. I don't see a timestamp. I just see 2 columns here.
If you pull the questions box out of the control box, you can make it bigger, and there's more columns.
There we go. Perfect. Let me take a look at some of these while we still have time. Futures, currently not. We are actually expanding out into crypto very soon. We have a partnership with a broker called Alpaca, and we're going to be using their data, and we're going to get some some crypto and FX, and then we're going to look at futures after that. The problem with futures, I would say, is the data cost, right? Because they come from the CME and they charge a lot, and our product sits around the $100 area. So we want to keep this, we want to keep this retail focused, and to do that, right, we want to keep the prices low. So that's why we don't really look at the future side of things. So there's a couple other questions. Do you look at time frames only on higher time frames, daily, weekly charts? No, you can use this same concept for a lot of different time frames. You can look at a shorter term chart. The beauty of trading is its fractal nature, which means that often you'll notice if something works or doesn't work on a daily chart, then it will either work or not work on the longer term chart. Like I showed you guys right when I started, I am using this RSI divergence concept in conjunction with the higher time frame in order to take day trades. So I'm looking at this RSI divergence on 15-minute charts, and when I notice it, I'm taking basically that on, saying, okay, the longer term chart's in a downtrend, and we're getting a bearish divergence on the intraday chart. So maybe I will take a trade based off of that. So some issues about to apply futures. Everyone's asking about futures. I will actually pass my future, all of this comments on futures back to the company for sure. It's one of the reasons that we love doing this, is we're talking to our audience. Do you know a score that I can look at to review what you're speaking with about RSI? I'm not too sure here. Do I have any proprietary indicators? We do. We're developing a bunch of them within the system, but they're used like other indicators as well, where yes, they're proprietary, but just like a lot of things, it should be used to assist trade ideas or your trading, right? It shouldn't be used to replace your trading. So, I didn't mean to tear down anyone who's using RSI right now. I meant to kind of redirect you and say, hey, maybe just look at it like this, see if it helps your trading. If you want a scanner that does this for you, you can check out Trade Ideas.
Awesome, Mike. I think that's a great place to end things. I want to compliment that I've never thought of using RSI in that way. And obviously in the examples, it works great, but I looked at it in a few other places, and I think I'm going to add that to my trading, box of tools. Great presentation in the current trading environment. It's extremely relevant. Ladies and gentlemen, if you're interested in compounding your portfolio by always rotating into the strongest names and having the ability to exit trades that have lost momentum, then look no further. Mr. Michael Nauss, who is a chartered market technician, has your solution. You can learn more by clicking on the link in the chat box, or you can find Michael at www.trade-ideas.com. Thank you so much for taking the time out of your week to join us today, Mike. It's always an honor to have you on the show. We hope you come back and see us at a future presentation.
Oh, I'm sure I will. It's always fun doing these, and I'll talk to you guys soon.
Now, I really enjoyed